So many times as people get started, shopping for their first home, it's really important to get connected with the right loan company and most importantly, loan professional that's going to be able to help us make sure that we can make the best offer and also know exactly, how much we're going to be able to qualify for and all of those important questions. So I like to joke that as a realtor, I am the loan officer's boots on the ground. So I'd like to introduce to you guys David.Yang. He's with Progressive Lending Solutions. And David and I have been working together for a very long time. I always call him my ace in my back pocket, especially for home buyers that are maybe struggling working with people who don't communicate the greatest, or maybe they have an interesting situation, maybe some breaks in employment or a little bit lower credit score, or even a, what are those special loans called again?
Portfolio, non-QM, non-prime, there's a lot of different names for it, but yeah, anything that falls outside the traditional market.
Yeah, absolutely. So tell us, David, what is the most important step in getting ready to be ready to buy?
So it's a good question, because a lot of times what it seems like most people do is they go online, they find a house on Zillow, Trulia, Realtor.com, then they click and find Nancy, because she's on there too. And then they find Nancy, and Nancy asks, well, are you pre-approved for financing? Where's the money going to come from? And almost immediately, the person says, I don't know where my money's coming from. So she says, okay, let's get you pre-approved so we can determine what your options may be to qualify. So that's kind of step one, even though that's not the order most people do it in, that's the order that it should go in. Unless you're buying cash, which most people today aren't, usually you need financing. So we get you pre-approved, we figure out your options, then we put you back to Nancy, she's going to help you find the home, and then you're going to find the perfect one. She does all those negotiations, and now it goes much, much smoother than if you're trying to do it the backwards way that sadly many today still do.
Absolutely. So just kind of on a high level, I always, when I meet with people that are going through this process, I always mention to them that the lender is looking for essentially 3 factors. And the first one is typically credit score. So you can tell me a little bit about kind of what you're seeing right now as average credit scores that would qualify.
Well, I will say, so being a broker, I have access to a lot of options that most banks don't. But because of the COVID situation that's been hitting right now, a lot of people, or excuse me, a lot of the banks have been pulling back on what they're allowing for. They're not allowing as low of scores as they once were. So typically, you need a credit score about 580, 600 or above in order to get anything done. But most lenders today want to see minimum 640 or higher.
Much easier.
It's much easier to qualify, a lot less restrictions. So that's typically what they're looking for. And of course, it's not just score. That's one element. There's a tremendous amount of other data that we're looking at too on that credit report.
Yeah, definitely. The other two things that we talk about are going to be debt to income ratio. That typically indicate which loan program that the home buyer might be able to qualify for. And then of course the last piece is how much down payment they have. Wouldn't you agree?
Correct. Credit, income, and assets. Those are the 3 things. And unfortunately, in most cases, if you have 1 or 2 but not the third, you're not going to get the house.
Yeah.
You got to get all 3 in line.
Absolutely.
That's what we got to coach on and figure out where you're sitting in that scenario, and if we need to make some tweaks and get you into the right position.
Great. So what are some common loan types that you're seeing right now that you're able to help home buyers with?
Well, there's 5 primary loan types. There's Fannie Mae, Freddie Mac loans, which are under the conventional loan umbrella. When someone says, I want a conventional loan, that's what they're referring to. Then you have government loans, which falls under FHA, VA, and USDA loans. So those are the 5 primary types. Some banks do all of them, some banks do some of them. And then there's everything we mentioned before that falls outside of that, which has all kinds of different names, but it's basically privately funded loans. So depending on the scenario, everyone's going to have a different situation. A lot of people think maybe one loan is better than another loan, but that's not really the case. It's really just what's the best loan for you. So we have to figure that out, because in some cases it may make sense to go with a completely different loan option than what you may be thinking you're starting off with, of what maybe you could Google search that you think you should get.
Sure, absolutely. So I get a lot of times, people will message me online and they'll ask me, well, Nancy, how much do I need to put down on a home? What do you recommend? And sometimes they'll ask me, do I have to have 20% down, and what can I do if I don't have that amount?
That's a good question, yeah. A lot of people have the misconception that you need 20% or more to put down on a home. But the reality is you actually only need between 3 and 3.5%, some cases 0% down. It depends on the scenario, but for a conventional loan even, you can do as little as 3% down if you're a first-time home buyer, move-up buyer 5% down. So it's not actually that high, most people have access to the amount of money they would need, either on their own through their savings, possibly looking at the retirement funds, gift funds, a lot of different sources we could look to for those funds. So yeah, it's not as much as most people think.
Yeah, that's awesome. What would you say, well, tell me the difference between being a broker and say going to a local lender like say Wells Fargo or your local credit union. You know, tell me what the benefits of working with a broker are.
Yeah, this might be a longer episode to go through this in detail, but basically, as a broker, we are not the ones lending the money. So people come to us and ask me, well, David, what are your rates? What are your closing costs? The answer is that that's the wrong question. We don't have rates. We don't have any fees because our compensation comes from the banks that we partner with, not from the clients. We have, as a broker, what's called a duty of agency relationship with our clients.
Just like we as agents do,
Exactly.
looking out for our clients and making sure they get the best house that they can for their money.
Yes, we have to act in their best interest to identify the best source of funding for them, figure out the best strategy. So that's what we're going to be looking at, is what's going to be the best option for you, shop the market. Again, no fees because of the way that our business model is set up. And because of that, on any given day, we're usually going to be able to offer our clients a little less in rate, a little less in costs than the traditional lenders out there would in retail. And again, because of all those resources, there's more options to qualify, meaning a greater chance of success for closing.
Absolutely. So tell me, what would you say would be the most important piece of getting us all the way to a successful closing?
There's a lot of key pieces, but I would probably say communication is going to be the number one thing, because when it comes to the process, there are so many people involved, most of which the home buyer is not even aware exist. Because not only do they have yourself and myself, but we've got title representatives, homeowners insurance agents, property inspectors, appraisers, underwriters, senior underwriters, funders, closers. We've got so many people involved in this that the person may not be aware of what's happening, but we have to have strong communication throughout that whole process. And usually, in most cases, the realtor and myself as the loan professional are the two that are directing that most of the way through.
That's right. Yeah, I like to, when I meet with a new home buyer, I like to tell them that while David is the face of your loan, there are a lot of little elves working behind the scenes.
and also communication with the borrower, because a lot of times the reason that we'll have delays in closings is because we don't have something we need from the client, and they're not getting us what we need right away, or they're not able to answer the questions right away, or get something to you or to myself or someone else. So communication with the whole process, not just with the team, but also with you as the buyer, is really a key factor.
Absolutely, and I always recommend just sitting down, for 30 minutes to an hour, just with me as a quick consultation to kind of know how do I prepare to meet with the loan officer. What are maybe some down payment amounts that I need? What are the different loan programs potentially available? And in addition to that, what are the what do I actually need to expect along the way? So I like to say that many times I'm here to manage expectations. So
and on that note too, when you're meeting with the client and they're asking those questions, the great thing to do is just redirect back to me for the loan side, and then if I get a question about the buy side on the home side, I'm going to put it right back to the realtor so that we can work as a team to answer those questions together. So
David, if I hear you correctly, what you're telling me is that people may need as much as 3 to 3.5% down. Are there any other costs, or is that is that all they need in order to be able to buy a home?
It's a good question. So there's the down payment, and then there's everything else that has to be covered too. You have your upfront taxes, your upfront insurance, and then closing costs, which are related to the transaction from the bank, the title company, others involved. So on average, that's usually going to be about 2.5–3% of the price of the home. So if you got 3% down and 3% in costs and all of these other things, you actually need about 6% total to bring to the transaction.
Yeah, wow, that's a big surprise. I talk to a lot of people, and I'll get a call and they'll say, Nancy, I've been saving and I have my 3%. That I need in order to buy, and I will talk to them and say, oh, well, we need actually a little bit more than that. All right, guys, so the most important step is really, if you're interested in buying a home, is to contact me first. We'll sit down and kind of go over, what your situation is, and then the next step is really getting you pre-qualified before we really run out and start looking at houses. As much as it's really tempting to go look at homes right away, I want to make sure that our heart doesn't get broken by looking at something we don't quite qualify for. And David, what would the best way be for that?
Yeah, so once they've talked with you and we understand exactly what you're trying to accomplish, then Nancy will usually send you over my way. We'll have a 15-minute phone conversation. In that conversation, I just want to understand some of your goals and gather the basic information I need to, again, cover those 3 keys: the credit, income, and assets, see where you're sitting, make recommendations, and if it looks good, then we'll get you pre-approved and back out to Nancy so you can start shopping.
Yep, and we're ready to go.